Hello everyone and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today we're going to be analyzing Air Products and Chemicals stock, ticker APD. This one came in by request down in the comment section of one of my other videos. If you have a stock you would like me to analyze, just drop it down in the comment section. I'll get it on the whiteboard behind me. Eventually I will make a video of it. If it's a stock that's in the S&P 500 like APD is, I'll post those on YouTube for free, and the rest I post on Patreon and then the full Cyclical Investors Club service over on Seeking Alpha. If you join Patreon for $5 a month, you can get a big discount on my full service, and those links will be down in the description. As always, this isn't individual investing advice. This is just how I analyze stocks. I tell people what I think about them, and today we're looking at a really good company, I think, Air Products and Chemicals. Looking back at their earnings, which is usually what I start with, the dark green area here on the fast graph. They are pretty steady and growing. I'm going to shorten it a little bit to look at the downturns. During the Great Recession, earnings fell 20%. They had a little period here where earnings fell 16%. Looks like they had a stock split, so maybe they had some kind of M&A or something going on there, not sure. Those are the only two declines over the past 20 years in earnings growth. So moderately cyclical if there is a significant downturn in the economy. Now the price looks, let me zoom back down real quick. While earnings are moderately cyclical, I'm going to guess this looks like a 40 or 50% drawdown. 56, so that's probably more like a 60% drawdown, about the same as the wider market during the Great Recession. So you need to realize that the stock price, especially if it was priced at like a 20 PE going in, 21 maybe, that if it's priced in that area going in, that the stock price could fall about triple what earnings fall. So earnings fall 20%, stock price falls 60%. Should be aware of that. So when we look at today, we're right at the same price we were right before the Great Recession. I mean, the same valuation on PE. So if we do have a recession, you should expect this to fall about 60%. That's a very simple way, but also a very useful thing to think about. And there's two different ways you can think about it. You can think about that being the risk. You can also think about that being the opportunity, which is how I usually think about it. But you can also think that that's normal. So if there is a recession, earnings do fall, the stock price falls 60%. Rather than panicking at the bottom, well, this is a recession. I own the stock going into the recession. So there's nothing wrong with the business. And whenever the recession ends, the stock price will probably come out. Now, as a person that doesn't own the stock, that's when I want to look to be buying, okay? So that's what I'm going to look at. And then whatever happens is mostly going to be a macro call, I think, on this one, because the rest of the time their earnings are growing pretty steadily, not super fast, like 9%. I'll see what my own estimate is here. It might be a little bit lower than that. They pay a dividend. Debt, they have a little bit, but nothing too crazy for what is probably like an industrial business. So let's look at the valuation here. Let me pull in my spreadsheet. All right. So yeah, my earnings growth is almost the same, 8.65% from 2015 through now. I updated this earlier this month. I'm looking at $12.98 per share, probably pulling forward. So we're looking at 2024 here. Now my recession estimate is going to look at 2023. So it's going to be more conservative because these haven't actually happened. And if the economy does something bad between now and then, these earnings could come down. So the recession by price is going to be based on a more conservative number that's already happened. And the other one is going to be based on these future ones, which are probably likely to happen if nothing unusual happens. So we have this 8% to 9% earnings growth on, we'll call it $13 in earnings. Now I adjust for debt a little bit. So instead of the $261 stock price, I'm going to use $277. So that if you bought the business along with the debt, that's what you'd be paying. And if you do that, the earnings yield is 4.68%. The way I like to think about that is if I bought the whole business for $100, it would earn $4.68 in a year. I could take that money if I own the business and go spend it on a new car or something. And then that amount would grow still at 8.6% or whatever that was. So in the next year, I would get an extra $5.08, and then that would grow. And if you accumulated all that money or just kept track of it, you could see how much money you would earn on your $100 investment after 10 years, which is about $176. If you put that in a CAGR calculator, it comes out to 5.81%, right about where the market's at, the S&P 500. So it's priced about the same as the market, all other things considered. And you kind of have to decide whether this 5.81% is worth it, considering cash is yielding short term anyway, like 5%. So you would get inflation protection and maybe 6% CAGR buying it at this price. And then maybe more like a 5% plus inflation. Whereas if you have the cash in treasuries, which yields 5% also, what you have is stock price market recession protection, stock price decline protection, the ability to put that cash and buy at a lower price. So really, those are like the decisions that once the stock is high quality business, which this one is, the real decision says, okay, over the next however many years, say 2 years, are the odds greater that there'll be some kind of recession, or are the odds greater that there'll be more inflation, and that somehow the business will be able to pass that inflation on, get a higher earnings growth rate, while the cash or the treasuries or whatever will just give you the 5% plus whatever the Fed raises the rates if there's no recession and things are great, which they don't look like they're going to do now. So that's kind of the call a person has to make. Generally, at the portfolio level, I'm kind of splitting the difference. I have about maybe a third cash and 2/3 in stocks, mostly growth, some I've held for a long time. But so that's kind of how I'm tilted right now at the macro level. And a person would just have to make that decision with the stock. Now, for me to be interested in it, in a recession scenario, 115 is where I'd be looking. And then in a normal situation, like 151 would be a pretty good spot to buy this one. And probably we can go back and look what the dynamics were like last time. It's never the same exactly. So it's one of the things you can kind of look at to see, like, at what point did it start selling off. So it actually started selling off before the big dip in October, right? So it's not one you would really want to wait on if you were worried about a recession. You want to get out and get into cash or treasuries sooner rather than later, or you don't want to buy it too early. So yeah, it bottomed right when the market bottomed, ultimately had a little bit of a deeper bottom there. But so no rush to buy this one, I don't think. If you think there's a recession danger, is probably how I put it. Stock price can fall fast. That's a 60% decline in 5 months. In 5 months, so 10% a month is what it did last time. Not too much warning sign before it starts to go either. I don't have the 2000 data. Probably nice to look at that, but. And we're about the same expensiveness now. So even though it's down, what I would say is even though it's down off this peak, this doesn't yeah, it's still like this level is about the same level it was in 2008. So this is more just coming off a boom that was really high. So the boom I would say is off, but their session risk isn't. That's how I think about it. Definitely one to keep an eye on. Consider buying, layering in at the prices that you feel comfortable at. For me, I mean, fair value is probably 200 a share. So if you just wanted to say, whatever, sessions can hold through it, I want to make sure I get mine. That $200 mark is probably where I'd be looking. Okay, if you found this useful, hit the subscribe button. If you have any stocks you'd like me to take a look at, drop them in the comment section. I'll see everybody later.